Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Powell says US inflation is taking longer than expected to hit its target. As well as that, the US and Chinese defense ministers, in first significant contact since 2022. We've got lots to talk about on the charts. Also, lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Jerome Powell and US inflation. Now, the Fed chair, Jerome Powell, has announced that it is likely that inflation will take longer than expected to return to the Fed's target 2% level. This rhetoric shuts the door on any early interest rate cuts and justifies higher rates for longer. Now, of course, we've been covering the topic of Jerome Powell's change in rhetoric in regards to interest rates and that kind of thing, and inflation, of course, extensively. And really, we've been following, this kind of journey that, the US interest rates and inflation levels have kind of been on ever since October, September of last year, when we did, of course, have that Jackson Hole kind of meeting and that kind of thing. So, a great deal has changed since then, although, of course, with, the entire end part of last year, really, we were starting to see some more dovish rhetoric from the Fed. We were really starting to expect earlier rate cuts entering into 2024. And as we did start off 2024, we were still expecting those early rate cuts of either March, April, or at latest June. And so, very optimistic on the inflation side, expecting inflation to come down, as that's what we were seeing. And, we were kind of expecting, therefore, interest rates to kind of accommodate for that by being lowered. That said, of course, over the past few months, really, as we have pushed now into 2024, we've really started to see that change with Powell and the other Fed officials really starting to return back to that older, more hawkish rhetoric that we were hearing maybe pre last October. So that's the kind of situation that we're at, and this is largely as a result, of course, the result of this kind of stronger US economic data that we are receiving in regards to employment, growth and business and industrial production. And most importantly, inflation is showing itself to be persistent within the US economy, and that is the figure that we did receive last week, which did come in above expectations. I believe it was 3.5%. I could be wrong, but we did come in 0.1% above expectations, and therefore now Fed officials, including Powell, as well as traders, are all starting to scale back their bets for when interest rates are going to be first cut and when ultimately inflation will begin to fall. So that's kind of been the situation for US inflation and interest rates. And ultimately, a great deal of risks still opposed to the US economy in regards to inflation, just as a result of other issues, other external issues outside of the US. We've been talking extensively as well on the topic of the Middle East and other geopolitical issues, all of which put at risk oil supply and therefore risk causing oil's price to run dramatically to the upside, which of course will greatly affect inflation around the world. And that's really what we've been hearing from numerous of these Fed officials, as well as other central bank officials such as Christine Lagarde from the ECB, and including Powell, all of which have kind of warned that these external geopolitical risks and kind of conflicts do of course risk a kind of spike in oil's price. As we've spoken about before, should a regional war break out within the Middle East, we could be looking at oil's price rise to around $150 a barrel should certain larger players get involved there, such as Saudi Arabia. That's definitely on the table. So anything like this could definitely put at risk, the inflation which both the Fed and the ECB have been working so hard to, of course, bring down. So that's the current kind of issues really facing the US economy in regards to inflation. That's kind of how Powell then has been dealing with that. So, with the Fed earlier in the year indicating that they intended to cut interest rates at least 3 times this year at 0.25 percentage point levels, but that number of cuts now is greatly doubted. The first interest rate cut date is now being anticipated by traders to be as late as in November, with the recent signs from the US economy presenting great strength and higher inflation. And these signs were added to just last week, when inflation once again came in above expectations. Markets are now pricing in their first rate cut to take place in September, but the growing minority of traders are now just expecting one or fewer rate cuts this year, with the bets that just one rate cut will be made this year growing, of course, after Jerome Powell's speech. In contrast to the Fed, in other central banks such as the ECB, the President Christine Lagarde has reiterated that the ECB is still on track to cut rates in a short order, with the ECB being expected to begin cutting rates in June. The US economy is expected to expand by 2.7% and the Eurozone only 0.8%. So that kind of explains the need really for the Eurozone to see an interest rate cut in comparison to maybe the US economy, which really is kind of dealing okay with growth when we do consider how high interest rates currently are. That said, where all central banks agree is that there's a great geopolitical issues which risk an inflation spike. So, key issues there. And some consensus between central banks over the issues facing inflation, but ultimately we are seeing this divergence now between these key central banks, with the Fed seemingly being the last now out of those kind of top central banks that is being expected to cut interest rates. So lots to think about there in regards to US inflation and US interest rates. That's all to talk about in this article though. Next one to talk about is to do with the US and China, with of course their defense ministers being the topic of discussion here. Now the US Defense Secretary Lloyd Austin has now spoken to his Chinese counterpart for the very first time. This comes in an effort to ease US-Chinese military relations whilst world tensions lift to new highs. Now, of course, that this is a very, very important article on a very important and interesting topic, that being, of course, US and Chinese relations, which, just like inflation or other more economic related issues, we cover this kind of topic and these two powers' relations greatly, ultimately because it affects markets far more than you might think. And ultimately, as we spoke about in the last article to do with geopolitical issues and that risking inflation spikes, ultimately, should China, let's say, invade Taiwan, that's a massive fallout, of course, on the economies of the world that, of course, needs to be addressed and understood. And the same, of course, applies with the Middle East, and that's why we've been covering the Middle East as well extensively. But ultimately here, we're talking about the US and China, with this being a topic of frequent discussion. And of course, recently when we've been talking about this kind of topic, we've really been highlighting the large issues between these two nations in regards to their relations. We've spoken many times about how the US and Chinese relations are ultimately really at their all-time low, with of course the Chinese spy balloon incident not too long ago over the US and that being shot down, of course, really dropping those relations to that all-time low level. And we've heard numerous reports from certain sources in regards to China working with their allies such as Iran, North Korea and Russia to both help Russia with its war in Ukraine, as well as the same with Iran in its proxy conflict with Israel. So ultimately, we're kind of in this very tough situation, or at least not we, but the US defense ministers and Chinese defense ministers, where they want to maintain this peace, so an all-out world war doesn't break out. but ultimately it's very hard to do that because, of course, both powers are kind of working in their own ways to aid their own kind of proxy conflicts or aid their own geopolitical interests. And so, when these two powers are interacting, it's kind of, one face for when they're talking to one another and another face to maybe their intelligence communities or military communities. So it's a very interesting situation here because, of course, we do know that the US is strongly allied with Taiwan, which China has repeatedly kind of noted that it would be willing to invade should, Taiwan kind of begin negotiations with returning to China. And so, it's very hard to kind of see these relations really improving. But this does seem to be the first attempt by the two defense ministers. Now, the last time a similar effort was made was when Joe Biden held a summit with Xi Jinping last year in San Francisco in order to resume military engagements with China, with these military engagements having been halted after the ex-House Speaker Nancy Pelosi visited Taiwan back in 2022. This new effort also comes just as the US Secretary of State Antony Blinken prepares to travel to China within the coming weeks to also help repair relations, with one US defense official, saying that the engagements between the two powers is helping to prevent competition from veering into a full-blown conflict. The meeting between the two defense ministers, however, focused on both regional and global security issues, with the importance of freedom of navigation being stressed, with the Pentagon remaining concerned of Chinese actions in the South China Sea, as we did speak about not too long ago, the issue with the Chinese military stopping two Filipino military vessels, which of course puts at risk the kind of stability that we kind of have currently within the South China Sea. So very important article here, and an important one to keep your eyes on, and one topic which will definitely continue to affect markets, with assets such as gold and even US equities heavily relying on these two powers basically having good relations with one another and staying at peace with one another. Next thing to talk about, though, after covering the articles, of course, is the charts, where we do have quite a bit happening. And of course, we are beginning, as always, on the US 30 to talk about US indices as a whole. And, we have seen some very interesting market action play out yesterday following the retracement that we did talk about in yesterday's morning market briefing. So in yesterday's morning market briefing, to catch anyone up, we did highlight how price has continued to push lower as we expected with the change in rhetoric from the Fed, but ultimately price has now retraced on itself and come into contact with this 3820 Fibonacci retracement level. And so we did of course expect then price to sell off from that level and continue lower, with this minus 27.2% Fibonacci retracement, Fibonacci extension level, of course, being that key level which we expected price to make its way down to. We haven't seen price make its way down all the way to that level, however. Instead, price has seemingly just stopped just before it, and is kind of once again retraced back on itself in a kind of smaller fashion that we did see before in other periods of market action. So ultimately, price is continuing this push lower, and in that move lower, price did penetrate those levels last seen in January and penetrated below this key liquidity zone that has previously acted both as a strong area of resistance and a strong area of support. So price was able to penetrate that, and so we could definitely be expecting now price to continue this move to the downside, after maybe once again gaining that liquidity needed, finding that momentum, and then pushing to the downside further. So lots to think about and lots to look out for then on the US 30, as we are now not too far away from those previous all-time highs made years back, which of course price worked so hard to break above. So if we do make it our way all the way back down to these levels, we're returning to levels not seen on price since mid-December, which is a massive retracement when we really think about the year's performance to date. Right, we've seen this kind of growth throughout the year thus far, but we're kind of now bringing all that growth back on ourselves by basically having this retracement take place. Possibly we'll be able to see this on yearly. Yeah, we can kind of just see this on the yearly. I know nobody ever uses the yearly, but I think it's interesting to note how you can see how prices spiked up with this move at the start of the year when the Fed's rhetoric was slightly more dovish, and this change in rhetoric now has caused price to sell off to the downside, and now we're nearing those levels last seen last year. So very interesting price action at the moment, and lots to think about, of course. That's all to talk about though on the US 30. Next to talk about, of course, is the dollar, which is continuing this push higher in an effort to just continue these gains already made. And whilst at the start of the week we were possibly hinting to the idea of price retracing and making its way down to these liquidity zones and Fibonacci retracement levels, prices ignored that and just continued this push higher, breaking above those recent highs, and ultimately now making their way and breaking that kind of minus 27.2% Fibonacci extension level, which we would expect price to move to maybe after retracing, but we didn't really see any retracement at all, just overwhelming bullish momentum. That of course though does leave price open to a retracement at some point, as price is currently in that overbought territory on the RSI. So always remember that as well, despite the fundamental data kind of pointing towards a bullish dollar, whether that be the geopolitical risks in the Middle East or the strong level of inflation within the US causing the Fed to lower interest rates last out of all central banks. You always still have to remember that price can become overbought regardless of the data. Next to talk about though is Euro USD, so still on top of the dollar, where price is struggling to break lower, is kind of at this bottom level not seen since November of last year. So prices made a significant sell-off, of course, on Euro USD, as of course we now expect the euro, not the euro, but the ECB to cut interest rates, kind of the first out of these kind of key central banks. And of course, with the dollar, we're seeing great strength because we're expecting the Fed to cut interest rates last out of all those key central banks, which is why we're seeing such a strong sell-off. And whilst we are seeing a strong sell-off, we're still not seeing price make its way down to the levels that we're seeing maybe last October or last November and September. So arguably we've still got a greater distance to run to the downside. So remember that as well. Next to talk about though is pound yen, where we are receiving a very important inflation figure today in regards to the pound, with the British inflation rate figure being released today. So that will be greatly affecting pound yen, and pound yen at the moment is kind of just ranging around, so we're likely to see some movement one way or the other following that inflation rate figure. And just going back to Euro USD, we are also seeing that Eurozone inflation rate figure also being released today, so that will be affecting euro as well. Next to talk about though is Bitcoin, which is kind of at these bottom levels now, last seen back around March and maybe at the start of March, end of Feb. So lower levels on Bitcoin at the moment, but still we have to remember that Bitcoin is holding these levels despite the change in rhetoric from the Fed, which we would usually expect a significant sell-off to take place on Bitcoin. So there still is this kind of bullish sentiment, it does seem like, within Bitcoin, despite the current moves which are taking place. Next to talk about though is gold, which of course as a result of kind of tensions within the Middle East, gold's price is still trying to push to the upside. That said, price did come into contact with these previous recent highs and has seemingly sold off from those areas. So still some resistance which gold is fighting. And lastly to talk about is oil. Not much is going on with oil despite the kind of geopolitical situation which is greatly affecting price. Ultimately nothing has yet happened which has caused price to either go to the upside or downside, and we are really waiting to see what Israel's response to those Iranian strikes on Israeli territory will be, as that will determine where oil's price does seemingly go. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, where we're getting some very important data today. So not loads of data, but the data we are getting is very important, and most of that is going to be on the European side. Now firstly, we are getting the Japanese balance of trade figure, and followed by that, arguably the most important piece of data today, as well as the next piece of data that I'll talk about. But firstly, we are getting the British inflation rate figure, so a very important figure which will be affecting the pound greatly and even affecting the dollar, so definitely look out for that. Next we'll be getting the Chinese FDI figure, and then arguably just as important, we are then getting the Eurozone inflation rate figure, so another very, very important inflation rate figure and economic data release which we need to listen out for and make sure you keep your eyes on. And followed by that, we've just got some US mortgage applications data, and then a Fed official's speech today. So some very important data, not loads, but lots to listen out for nonetheless. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. That's all from us at Wildwood Capital though. Have a great one. See you later. Bye.